My name is Mitch Messer. I'm with Home Pride Properties. I am a landlord and work with investors here. I'm about to introduce my partner in crime for today, but before I do, I just want to establish a couple of quick ground rules. This call is intended to be specifically for the purpose of talking to folks who are investing or thinking about investing in real estate here in Metro Atlanta. It is not a sales call. There will be no selling of product or services during this call. It is intended to be a working session. It's not going to be a lecture. We are going to cover a roadmap for investing, but that's largely just to give us a common set of terms to use going forward. But it's not going to be a standard webinar where we're going to lecture for the entire hour. We're going to talk about how we've seen investing done, and then we're going to solicit questions from you, the attendees, so that we can have a discussion about how to do this better if you're currently doing it, how to get started if you're thinking about doing it. But that's the purpose of this. And we're doing it because, as sad as it is, this is fun for me. This is fun for us. This is what we enjoy doing. And so we'd like to be able to share that with others. And we also know that it is daunting to begin investing in a completely different country with a different set of rules and laws and guidelines and such. So we'd like to make that easier. So having said all that, I would like to take this opportunity to introduce my co-host and partner in crime, Marta Brown, who is the managing broker with Blue Peach Realty. She's going to be walking us through the roadmap for investment. Marta, you there?
I'm still here. Good
Awesome.
Morning.
Awesome. So what I'd like to recommend is that we're going to allocate about 20 minutes or so if it takes that long, for the presentation. I'd recommend that for starters, that you hold your questions until Marta gets all the way through, and then we'll happily engage all your questions in as much detail as you need. But I do want to at least establish the framework for talking about investment. And then when we have a common set of terms, then we can dive back into the details and make sure that we've answered all your questions and covered all your concerns. So having said that, Marta, let you take it from there. And again, just let me know when you need to advance, and I will advance to the next slide.
Great. Thank you, Mitch. Good morning, all. I wanted to say I am just delighted that you're interested in investing in the Atlanta area. It provides a lot of unique opportunities, and of course, we love what we do, and we also love the Atlanta area. It has such a variety of opportunity that we'd like to share with you. Mitch, you want to go to the first slide? What I'd like to do is to get started with what you need to know to acquire properties here in Metro Atlanta. The market here is similar to any other large metropolitan area in that you've got opportunities to purchase properties that are what I call high-end or more expensive, and low-end and at different levels of repair as well. So you've got those market nuances. You also have new industries that are moving to the Atlanta area, like Amazon, like Facebook. The movie industry loves us here, and we love them. So I'd like to just say that those are some really kind of unique and hot characteristics that make the Atlanta area very desirable. It is beautiful here. The trees are beautiful. The shrubs are beautiful in the springtime. The weather is great. People like moving here. So just something to think about. As you define your investment goals and strategies for the Atlanta metro area, give some thought to what you want to do in terms of how many properties do you want? What kind of price point are you looking at for those properties? Also, when are you looking to get started? Is it today? Is it 6 months from now? And what is the time frame for you to purchase those properties? So if you're ready to start today, how many properties do you want to buy today? You know, you got to be looking, of course, at your budget, et cetera, but you need to define those kinds of goals and objectives. Another thing is, what's your interest strategy? Are you planning to buy properties for cash? Are you planning to buy properties on an owner financed approach, which we'll talk more about later? Mitch will talk to you more about later. So there are some things you need to think about in terms of how you're going to enter the market. What's your exit strategy? And the exit strategy is primarily, if for you as an international investor, you'll probably be buying and holding properties, not flipping and renovating. And you certainly you could, but you need to know those are other possible strategies. Okay, Mitch, I'm ready. You can go on to the next slide. Okay, now who can help you find the properties? Usually is a key question for any new investor. Certainly, we've got them listed here on the screen for you to view. Wholesalers are hot. Owner financing specialists are extremely important to international investors because they give you an opportunity to purchase properties without needing the full amount up front. And again, we'll talk more about that. We've got the multiple listing services. For licensed real estate professionals, you're going to have access to those. Zillow and Trulia feed on the multiple listing service. Licensed real estate agents can help you, and other local investors that are already in the market can also be of some assistance to you. So there are ways and places to find properties out here. Okay, Mitch.
Hey, Marta, let me jump in here just to say a couple of quick things regarding finding properties, and that is, this makes reference to the previous slide about criteria, which is that the fastest, in my opinion, the fastest way to get up to speed quickly on a market is to see a lot of deals. And that typically means getting on the lists of wholesalers, talking to a bunch of agents, but you want deal flow. You want to be able to look at, frankly, as many deals as you can stand, and then start what I'll call, if this were stocks, it would be desk trading, which is to say, kind of imagine if you were going to buy this property, what kind of return you'd get, what kind of, would it meet your needs, what area is it in, but getting smart quickly on a particular market, for me, involves looking at a lot of deals and trying to figure out where the opportunities are, what zip codes are hot, what kinds of deals do I want to get into. And in that regard, it's in your best interest to be very, very specific about your financial needs. And by that I mean, I'll often hear people say, I want to do a great deal, or I want to get a good deal. Well, you need to be a bit more specific about that. I like personally to be precise in my requirements, and for me, my favorite metric is cash on cash return, because everybody understands that how much cash goes in for a year, how much cash comes out, divide one by the other, and that tells me what kind of money I'm making in cash. I'm not as trusting of analyses that involve equity, because A, I can't count on equity, and B, I can't eat equity, but I can eat cash, and I can count on cash. So for me, my standard is, when I'm looking at a deal as a landlord, I don't want to look at a deal that offers less than about a 10 or 11% cash on cash return. And while I would never trust anyone else's numbers, when they present me with a deal, I'm going to want to run my own numbers to see what that deal returns. If I do that analysis and I look at that deal and it comes up at 5%, then I know I can move on to the next deal. And if I do that analysis and I do my math and it comes out to be 15%, then I put a pin in the fact that, wow, that wholesaler just had a really good deal. And if I start to figure out that certain wholesalers have really quality deals and other wholesalers have junk, then perhaps I can start figuring out who I need to listen to and who I can ignore going forward. But you start to build an understanding of the deal climate. Who's got the good deals, what a good deal looks like, where good deals can be found. And of these resources that you've identified for helping you find properties, in the beginning at least, they're all equally valuable. It's only once you start running your own numbers that you can kind of narrow that down and figure out who really has good opportunities and who doesn't. But only by doing that can you kind of figure out exactly what kind of sources you want for your deals. Because you probably get the same thing, Marta. I probably get 10 emails a day from other folks who have deals available in Metro Atlanta. There's
Yes,
no
I do
shortage of
too.
deals being marketed.
Mhm.
But you will quickly, after you've seen about 10 or 20 of those, you start to quickly develop the skills that will help you figure out which ones are deals and which ones are not. And that will come in handy when you actually start getting ready to buy, because that decision-making, that speed of decision-making is what I think allows good investors to make quick decisions so that they can go after the deals that they see as valuable and not spend a lot of time spinning the wheels trying to figure out how to do that. So that was my 2 cents. I will now advance the slide, and I will
No
go back.
problem. Thank you, Mitch.
Sure.
Okay, another item, since you're international, unfortunately, you're not physically here. So you've got to have a success team in place. That's something that is very critical for all of you who are international investors. When you want to take a look at a property, for example, you'll need a pre-acquisition team in place, because you need somebody who can quickly get to the property, take pictures for you, complete reports for you, so that you can have a better idea if this is a property you really want to purchase. And it's difficult when you're far away, but certainly there are ways to make it easier with a pre-acquisition team. You've got suppliers, because let's face it, when you buy a property, it's probably not going to be in perfect condition. So you're going to need supplies, and you're going to need someone to get those to you. So you've got to have those kinds of people in place as well. Property management services are key for long distance, I'll say, investors. Who's gonna pay attention to making sure the property is going to be renovated as you requested? Who is going to be your eyes and ears on the ground, in essence? And who's going to help you find tenants and put tenants in place and collect money? A property management service can do that for you. Renovation team of contractors. You're going to have to get a property in rent-ready condition. And rent-ready is defined by you, but you need somebody who's going to do that for you. And that would be, of course, the plumber and the electrician and the carpenter and the roofing specialist and the HVAC specialist. So you've got to have all those people in place to make sure that the property is in good condition, so that a tenant will want to live there, because you want to put it in revenue generating condition. And of course, a legal team needs to be in place. The legal team will help you set up companies that will allow you to collect rents and do all of those things that are important, because you're physically not here, but can still happen for you on your behalf. And you need a trusted team to do these things. Mitch, is there anything you want to add?
There are a couple things. First, I wanted to talk about the pre-acquisition team, because I alluded to this when I talked to a few folks about this presentation. The number one reason why I see folks missing out on great deals, both local and out of state and international, is speed of execution. I talked a few seconds ago about how it shouldn't take you weeks to decide that a deal is a good one, because by the time you've decided that it's a good deal, it's already gone. That also applies to, once you've decided that it is a good deal, taking the positive steps to put eyes on the deal. If you've got a local, we'll often have inspection appointments where local folks can take a look at a house. If you're operating out of the country, and you have identified someone here local who can look at a property on your behalf, then that person or that team needs to be responsive. They can't take days to reach out to someone like me and say they want to schedule an appointment, because again, if it's a really good deal, especially in a hot market like Atlanta, it won't last more than a day or so. Usually, our best deals start getting responses within a couple of hours of the marketing going out, and within a day or two, it's oftentimes gone. So it is challenging, I recognize, when you're out of the country to assemble that team. But once you have assembled the team, the right team, then their ability to reach out to someone like me and say, hey, we want to take a look at the house next week or tomorrow at 10 o'clock, gives you a leg up when it comes to being able to
I'm
make,
sorry.
that's okay, no worries, to make an assessment about a deal. So having a responsive team, a responsive local team is critical to just having the opportunity to get deals. And I've seen a lot of folks miss out on deals for that. I did want to talk about property management services, I think speaks for itself. You're not going to want to manage it from out of the country. Those of us who are here, who are landlords, barely want to manage it ourselves. Having a property management service is a no-brainer, and the right one will actually save you time and money rather than being thought of as an expense. And they will bring along with them a trusted team of contractors and inspectors and other professionals, so you don't have to go assembling all those other folks. If you get the right property manager, they've got their own team, their own trusted team of colleagues that they can bring on board for a variety of repairs, so that you don't have to go picking those folks up individually. And I do want to say just one quick thing about the legal team, and that is here in Georgia, the pretty much the standard entity for taking property in title is going to be the LLC, the limited liability company, because it's the cheapest to organize, the cheapest to maintain, and it provides a fair amount of flexibility and, as the name would imply, limits to some extent your liability. But there are other technical nuances that we won't cover on this call, but we may cover in a future call, like the use of trusts for privacy purposes, and other legal strategies that, while they're not particularly expensive, are a hack, if you will, an enhancement to existing strategies that every attorney won't necessarily suggest. And so having a team that works with investors like you will be an important part of assembling your local team, because the right attorney can help you structure things so that you're not paying, for example, unnecessarily in taxes, so that you're not exposed to lawsuits, so that you're not building up all this equity to one day down the road have someone else take it all from you because you made a minor legal flaw and they came along and sued you. So having that legal team in place is crucial. And I'm not really speaking about the closing attorney. Yes, you'll need to have a good closing attorney, but I'm really talking about effectively your local counsel, the person that's going to structure your LLC, possibly be your representative when you close deals, because that's another factor. If you're out of the country and you want to be able to close quickly, which is important for a lot of folks like myself who sell deals, then it may be faster to have a local representative, an attorney, for example, that has the ability to sign for deals on behalf of the LLC or the trust. So these are other considerations that will play into who you pick for your team, but having a solid legal team is a must, and it doesn't have to be an expensive proposition. And now I will hush and go into the next slide.
Thank you, Mitch.
I'm good at hushing.
Okay. You may be concerned about what happens if the carpet needs to be shampooed, or the carpet needs to be replaced, or who's going to take care of those scratches on the wall. So you need to get a property in rent ready condition, and rent ready differs for different investors. So what we're suggesting is you need to define your own repair guidelines. If you want a property to look the prettiest and the cleanest and the brightest, then you'll probably get better tenants. That's just the way it works. If you've got carpeting that looks very soiled, the tenant's not going to worry about keeping the carpet clean. But it depends on what your, what kind of resources you want to put in terms of money and time to get it in certain conditions. So I like to, for all of my clients, I like to just find out what are their parameters. And that's something you need to help us define. You need to have an estimate of what those repairs and renovations are going to be. Somebody on the ground is going to have to do that for you. Certainly they can take you through the property with, showing you the property from their phone, for example, but you probably want somebody here who can define what those numbers will be and what needs to be done. And the criteria that I like to think of is, what do I need to do to make it safe? Is there something about the property that's not safe? Is there a trip hazard? Does the oven tip? If you've got children, you need to think about those level of details. And then how pretty do I want it to be? Does it smell good? Does it smell clean? And you need the funds to complete those repairs. So, and those funds need to go into an account that is accessible to the company that you'll use to get the property in rent-ready condition. So there are pieces to the puzzle that have to come together to make sure that property is rent-ready. Okay, Mitch, anything you'd like to add?
No, I think you covered this quite well, except to say that your comments about the safety, the inherent safety of the property is, in my mind, a common decency thing. We don't want to have tenants living in a house that's not safe, but frankly, it's also a financial thing. It's a liability thing. You don't want, you don't want the smoke detector that doesn't have a battery in it to cause, harm to someone that therefore allows you to get sued and have them take all your equity that you built over the last 5 years. So yes, you want to be a good landlord and for good karmic reasons, but you also want to protect your assets, and the best way to do that is to have clear guidelines for the level of the highest level of safety for your rentals. Last thing I'll also say is that in many cases the definition of rent ready is going to be dictated by the environment, by the community in which the house is located. There are some areas where the standards for rent ready are pretty darn high, and you're going to want to make sure that your rental lives up to those standards, because that's what you're going to be competing against. And there are other areas where it's not as high. We won't cover this at length in this call in all likelihood, but for example, here in Metro Atlanta, there are communities that are largely rental communities. Most of the people that are there are tenants. And there are communities where most of the people are owners, and those, generally speaking, are very different communities. On average, the homes that have a higher percentage of owners are just in better condition. And so, if you have the one lone rental in a sea of owned houses, that's a good place to be, because it means that you're going to be in a neighborhood where everybody's maintaining their home at the same level that you are, if not higher. So these are considerations that need to be taken into account when you're determining what rent ready means, but also when you're acquiring property in the first place, which is why it's helpful to have an understanding of what's going on the ground. All right, I will advance, Marta.
Thank you.
At least I will try. Let's see. There we go.
Okay, the question is, do you need a property manager? And quite frankly, it's a resounding yes, absolutely yes. Unless you feel that you can have a tenant do the managing, and that generally doesn't work. So you need to have someone who is a professional to keep track of what's going on with your property, to keep the tenants in check, to keep an eye on your asset, which of course is the house or the building that you own here, and also to keep an eye on the asset in terms of the incoming rents that you're going to collect. So somebody's got to do that for you. It could be your friends. You may have friends here that are local. I would caution you with friends, but certainly it's a personal decision. You may trust your friends completely, so you may want to consider them. Same thing with family. You may have family here. Some investors will have local family members that they will have do the management for them. It gets a little dicey when the person that they have rented the property to may be a friend or a friend of a friend or a distant family member, and it's time to put them out of the property, to evict them from the property. It gets a little testy at that point. You might want to consider a professional manager. That would be my recommendation, because that is their job. They also know the court systems if there needs to be actions taken in terms of an eviction of some kind, or any kind of dispossessory action is what I'm suggesting. And also someone who is bound by the laws and regulations of the state of Georgia when it comes to collecting rents and handling other people's money. So you want somebody who's probably a professional doing that for you, who have guidelines of how quickly to get monies to you, how quickly they can react, and know what to do, know what steps to take if you have a problem tenant. And the last thing on this slide, just to give you, again, things to think about, is you'll need to make this all very legal. You'll need to have a contract. You'll have to have some sort of agreement to move forward. Regardless of who you use for a property manager, you need to put it in writing, and you need to define really what your expectations, your goals are of that person who is going to manage it locally on your behalf. So those are the things that I'd like to just throw out there that you need to consider when you're thinking of purchasing properties in the United States, and specifically in Atlanta. Mitch, is there anything you'd like to add?
Yeah, well, I would at least add some emphasis to your comment that if you are physically not here in the United States, you definitely need a property manager. There's just no two ways about it. Both Marta and I are experienced landlords, so we know the joys and pains of having tenants, and it's a job. It's a job that is frankly won or lost in my opinion, in the paperwork that you use and the systems you have in place. And I guess you could argue that the paperwork is one of the systems, but that lease that they sign is probably, in my mind, 70%, if not 80% of the effort. The wrong lease, and you're doomed from the start. And that's the kind of thing that you don't want to go get the Office Depot cheapy special lease. That's useless. You want a tried and true, tested, Georgia tested lease, and that's going to come in most cases from a professional, a manager who's done this for themselves or for others or both previously. I would never have friends or family as tenants, much less as managers of property. And, just to be clear, here in Georgia, you're not allowed legally to be a property manager for someone else's property unless you're a licensed agent. Correct, Marta?
That is correct, unless it's your property. So,
right. Unless it's yours or you have a stake and interest in it.
Exactly.
So you could work your way around it. You could get cute and give them a tiny percentage of the ownership of the LLC or the trust. But again, you don't want friends and family, not because you don't trust them, but because unless you know how to be a landlord, you will not be effective in one. And regardless of what the financial model says, regardless of how much rent you're supposed to make, how much rent you actually do earn is dictated by how well that property is managed. Regardless of what your financials say as to what you will expect in repairs, what you actually will pay in repairs is going to be a function of how well that property is managed. So all of the assumptions that you make to get your cash on cash return hinge on a qualified, experienced property manager managing that, and the wrong one will throw all of your numbers out the window, including vacancy. And again, vacancy is the bane of a landlord's existence. You will not make any money if the property is not well managed. So, given how critical it is, you don't want to spend all this time buying the right investment, negotiating the right deal, and then fumble it at the last yard before the goal because you picked a manager that didn't know what they were doing. The right manager will make you a fortune. The wrong manager will make your life, frankly, living hell. That was all I had to say. And because I'm not a property manager for others, I can say that. It's not the least bit self-serving. We do manage our own property, but that's because that's what we do for a living. But if I were going to invest in another country, or for that matter, another state, I would definitely hire a property manager to do it. I would not be trying to do that myself. All right, Marta, I can forward to the next slide if there is one.
Yes, there's one more slide.
Oh, there we go.
And this is really kind of a jumping off slide because as international investors, you will probably prefer the buy and hold strategy. The buy and hold strategy is one of many potential entry strategies. But one of them, others are buying and then wholesaling to someone else. That doesn't work for you because you're not physically here. Buying, fixing it up, and then renovating it and then selling it probably is not as attractive to you. Yes, you would have a higher investment in terms of cash up front, and then you would have, of course, your hope is to have a higher amount of profit that comes out of that renovation. But that's a different kind of strategy. What we think will probably be more attractive to you would be the buy and hold strategy, where you will purchase a property, get it rent ready, and then market and put tenants in it so that they will create revenue for you. You want a revenue generating asset. That's what you're looking for. In order to do that, and in order to find the right kinds of tenants to go into your property, you would want to have a right level of screening for that tenant. And by screening, I'm talking about paper applications. I'm talking about doing a credit check and a background check and an eviction check on that prospective tenant. You also want to do a verification of their employment, just having their employer to answer certain questions. And you also want to verify with their landlord that they took care of the property, that they did not trash it. They were not a problem tenant by noise or other things that tenants do to create aggravation for landlords. So you gotta do the work up front to make sure, as best you can, that you've got the best person in the property. The next item is managing money from the tenant. The tenant will send you income, their rent payment, and that has to get to you somehow. So yes, you could probably have your tenant to put it into an account and have your attorney here get it to you, or maybe the tenant could mail it to you wherever your home is. The best way is to have a professional manager to do it. And they will handle your money in what we call a trust account. And that trust account is regulated by the state of Georgia, the Georgia Real Estate Commission. And those monies are held in that account. You pay a fee, of course, to the managing company, but they will send you your owner proceeds in a timely manner. The other thing that's important with the buy and hold strategy is occupancy management. The biggest expense oftentimes with the buy and hold strategy, where you buy a property, hold it for income, is vacancies. Vacancies is a very high expense, or can be. costly expense. So you want to be sure that that they stay occupied. You want to continue to have it generating revenue as much as possible. And oftentimes it helps to have a professional do that, or somebody here to do that for you, because that's why you're doing this in the first place. You want to make money. And that's what, these are just some of the things that you need to think about for that type of strategy. Mitch, anything you'd like to add?
Sorry, I was muted. Well, you and I both know that we're both buy and holders, and that the quality of the tenant is going to dictate the quality of your investment. Because in a buy and hold, the person that's going to work every day to make you money is the tenant. And so, if that tenant isn't a quality tenant, if they're not paying on time, and if they're not remaining in the property on a regular basis, then that's going to impair your investment. That's going to impact your ability to make money off of this. So finding that quality tenant, making it easy for them to pay, not falling into the pitfalls. I mean, there's a huge, not huge, but a sizable bigger pockets discussion a couple of weeks back about how to accept money from a tenant. And one of the things that you and I know, Marta, is that if you accept funds from a tenant, and then, or if a tenant doesn't pay you and you file evictions, you file the eviction paperwork to get them out, and you've allowed them to deposit funds directly into your account, a smart tenant, all they have to do is go to your bank, put $1 in, and you have to file that eviction all over again because you've accepted money from them. And so there are problems with having a tenant directly deposit stuff into your bank account. That may work for one tenant, but when you have 5 or 6 or 7 or 8 tenants, trying to keep track of that is a nightmare. And there are ways, a variety of advanced ways to handle that money management. ACH being one, having it come directly out of their checking and savings. But again, unless you do this for a living, you're not going to keep track of all of those techniques and strategies. That's why you want to have a professional property manager who is in the business of doing that, to advise you on that and set that up for you. And then occupancy, you're absolutely right. Vacancy is what kills your cash flow. A vacant house, not only does it kill your cash flow, it increases the likelihood that you're going to be vandalized or have court enforcement come along and say bad things about you and make you pay money. So keeping it occupied is the way to avoid all that unpleasantness. So yeah, I'm with you on all of that. Absolutely.
Let me add one more thing, Mitch, is that there are different ways you can put tenants in a property. One of them is what we call the standard method, which is a rentable tenant who puts down the first month's rent, and they move in and they move out after a year or continue the lease, but they're a standard tenant. Another way is to put a tenant in there as a rent-to-own tenant. Mm-hmm. A rent-to-own tenant will be renting the property. They will have a standard lease agreement with you, but they are putting down more money up front. They put down earnest money deposit because they are signing a lease, but they're also signing a purchase and sale agreement. And the closing date that they want to purchase the property is a year out. These are people who can't qualify for a mortgage loan today, be that because they need to save up some additional money, they need to work on their credit, whatever the case is, but they are a good tenant 12 months from now or possibly 24 months from now. And so you've got an opportunity where you can have a tenant in place who will be the owner, who will buy that property from you in a 1 to 2 year period of time. So that's another potential way to put a tenant into a property to generate revenue. Just want to throw that out there. Certainly that's something we can talk about in the future.
Yeah, that's obviously one that you have used and we have used to great success. In fact, to be honest, I don't know why anybody, if the house allows it, if the house supports it, I don't know why anybody would just do a straight rental if they could do a rent-to-own or a lease purchase or lease option strategy. So yeah, I'm with you on that one. This is the jumping off point. Is there another slide after this one, Marta, or is this pretty
No,
much?
this is the last formal slide.
Okay,
Yeah.
so I will ask those of you who are on the call, if you have specific questions, there should be somewhere on here a Q&A section. You can go ahead and type in your question, and we will answer all the questions that we can. I see that we have a few participants. Hey, Adam. Hey, Eric. And hey, Richard. We are excited to be able to chat with you here. So if you have a specific question, feel free to go ahead and type that in. In the meantime, I'm going to talk a little bit about the revenue models, because we just talked about two, and this gives me a nice segue into at least bringing up a third that we are exploring. So we talked about straight rental. Everybody understands that. Put a tenant in, they pay you rent every month, and the premise is that and they typically pay a month's security deposit that is refunded when they move out, minus any damage that may have been done to the property. The model that Marta just mentioned a few minutes ago is the lease option or lease purchase or rent-to-own model, where you're looking for somebody who wants to own a house but might need a little bit of time, maybe a year, maybe a little bit longer, to qualify for a mortgage to buy. But in the meantime, the agreement is, I'll let you move into this house now that you might buy down the road, or hopefully will buy down the road, and I will freeze the price. So I won't keep escalating the price, even though in the real world, housing prices are going up on a monthly basis, if not a daily basis, because that's just the market we're in. I'm going to hold that price fixed for the year, so that if you can get this thing done, you can buy it at this locked-in price, and everybody is happy. That's the lease option model, and we have used that. Marta has used that for her own on her own account for years and years and years, if not decades at this point, to great success. There are plenty of other models, but one of the models that's intriguing me right now, I think probably intriguing both of us, is the whole vacation rental model. It's still very, very new, but this whole notion of, I would call it Airbnb, but it's not just Airbnb. There are other websites that do it. But the idea of having a house that people rent, not for the year, but for a couple of days, and what little research I've done suggests that the profit opportunity is much, much better, in some cases 2 or 3 times as good as what you could get from a straight rental. And again, obviously that's not going to be every market, that's not going to be every house, but if there are markets and houses for which that is true, I want to know what those markets and houses are, because I want to figure out how that works, because if I can double or triple the amount of income I'm getting in from each property, that does wonderful things for my cash-on-cash return, and I want to know more about that. So that is a model that we are exploring. Actually, ironically, Marta and I are both exploring that model, as well as some others. And so we'll hopefully have more to talk about going forward. Okay, so we have a couple of questions. They looked like they came in at both at the exact same time, so I'm going to just throw them out there. And Marta, I'm not sure if you can see these or not. You might be able to, but I'll address Eric's question first.
Yes, I can see them, Mitch. Thank you.
His question is, why Atlanta, not D.C. or Jacksonville or somewhere in Alabama? Are the statistics for Atlanta significantly better here than other places? That's a great question, and the answer is manifold. There are lots of reasons why Atlanta and not D.C. or Jacksonville or somewhere in Alabama. Let me talk at least about one of them, and this is one that doesn't get a lot of attention. And that is the climate for landlords. And by that I mean, if you are a landlord in a state like, say, Florida, the penalty that you pay for having a tenant and wanting to get them out is severe in the sense that it can take you months and months and months and months, if not longer, to get a bad tenant out than it does in Georgia. In Georgia, if you do it right, you can get a tenant out we've done it in 24 days, but about a month is reasonable. And generally speaking, doable. In states like Florida and California and New York, it can take years to get a tenant out just because the legal system is designed to be a bit more tenant friendly than Georgia. Georgia is very landlord friendly and it's very lender friendly. So it's easy to evict relative to other states, and it's easy to foreclose relative to other states. So that's, for a landlord, that is one reason, and it's a huge reason, because sometimes you do get wrong with the tenant, or sometimes a good tenant goes bad and they have to go. And if it takes you 5 months to get them out, that's 5 months of non-payment that's going to destroy your cash-on-cash return in a state like Florida or New York or California. Whereas in Georgia, yes, you made a mistake, or yes, they went bad, but you fixed that problem in less than a month, and then you've got another tenant in there earning you money, and you're back on track. So that reason alone is a big, big reason, and it's not discussed often because it only matters once you've gotten down to the specifics of, okay, I've got a tenant in here now. It's not something that you put on a spreadsheet. It would, but it has an impact. It definitely has a real world impact in your return. So that's why Atlanta. And not to suggest that you wouldn't invest in these other places. We have clients that are investing in other parts of the world in addition to Georgia. But that's one reason for Metro Atlanta and for Georgia. The other one is, one of the other ones is, frankly, and Marta made this point when she first talked about Atlanta, is that the market here is going crazy. People are leaving places like California and New York to come live in Georgia. Georgia is seeing a net gain in population here in the United States compared to other states. And the data there is quite clear. The weather is nice, the cost of living is lower, and it's easier to get people here. It's easy to travel here. Delta Airlines hub is here in Atlanta. So travel here is cheap. Living here is relatively inexpensive. And the weather's nice. So people who are freezing their butts off in New York retire to places like Georgia. People who are tired of spending, $1 million for a hut in California are investing here in Atlanta. So that's what makes it appealing for those folks. And yes, population growth, employment growth, rise in rents, these are all factors on top of the other considerations I just mentioned. But if you add those all up, at least Atlanta is making the short list for a lot of investors. Certainly not the only place, but yeah, absolutely a worthwhile entry on your list of things to consider, of cities to consider here in the United States. Marta, did you want to add anything to that question?
No, I think you covered it quite well.
And I know, and this is my fear, and I knew it was going to happen, that time is short. I'm going to get to your question, Adam, and then I'm going to hit Eric's last question. Adam's question is, what are the tax implications that international investors should be aware of with owning property in the U.S.? And the short answer is, it's hard to give a general answer because it'll depend a lot on how they structure their entity that they're buying in, what country they're in, and so the short answer is there are tax implications. You'll want to get a really good accountant, and fortunately, we have a really good accountant that we can recommend. You don't have to use them, but that's part of the virtue of having this team of a good solid ground team, is that your accountant will be part of your team. But the short answer is, our recommendation would be that you create a local Georgia-based LLC, and the beneficiary would be either the international investor themselves or an entity that they control. But to the outside world, the thing that's buying property here in Georgia would be that Georgia-based LLC that possibly your local attorney would organize for you. And that they may also be a member of, so they can conduct business on your behalf. And then that LLC will be required to pay taxes as any other Georgia LLC would be. And depending on where the income goes from there would dictate the international implications. If some investors that I know use the proceeds for their U.S. investments to stay in the U.S., to buy more property here, so they're not taking it. They're not siphoning it back to their home country. They're using that to do more investment here. So as long as it stays here, I think the tax situation is fairly straightforward, but I would say that you'll definitely want to talk to a good qualified CPA here in the States, ideally one that has clients like you, which is the case for the one that I would recommend, and that understands the needs of real estate investors, which is also the case for the one that I'd recommend. But those folks do exist, and we can make that recommendation. Another question is so this one's somewhat self-serving, and they're asking what services our team specializes in. This gives me an opportunity to talk about the premise behind my model for investing, which is what I use, what HomePride does itself, and what I recommend other folks do, which is assemble a team of quality performers who are independent, but who work well together. That's the reason why I recommend Blue Peach Realty for all of our international and local clients, because I know that Marta will do a great job, and her team is set up to address the needs of investors. And so it makes my job easier because I know that part will be covered. But she is Blue Peach is an independent company. So I know that she's going to do right by her clients, and it may sometimes mean, not buying a deal that we have available because, she advised the client that this may not be right for them. And that's what she should do. I'll speak for HomePride. HomePride specializes in, when we're not being landlords, in finding deals for other people who want to be landlords. We deal source. We try to find those deals that make sense for landlords and make them available to our clients who are investors. And then we try to help them assemble these portfolios of investments so they can make money and hopefully buy more deals from us. So HomePride specializes in the deal sourcing and to some extent the financing. Marta, I'll let you speak to what Blue Peach does. Obviously, it does property management and acquisition, but what would you say are the main services that Blue Peach specializes in?
Thank you, Mitch. Yes, Blue Peach, we certainly provide full property management services, and we also provide a service to get a property ready. So we provide project management services as well for our clients who do not live local. We also have what we call pre-acquisition services, where we will go out and take a look at a property. And I think I mentioned this earlier. Take pictures, certainly put together reports, do comparable analysis for rentals and for sales so that we can assist the investor in their decision-making process. So that's something else that we do. We are licensed in the state of Georgia, of course, which is always a good thing when you're trying to, make sure you have somebody who is trustworthy as well. So go ahead, Mitch.
And I'll also just throw out there that in addition to all of that, you have experience in property management, landlording, private lending, IRA lending, lease purchase, owner finance. So you've got a very deep level of expertise in pretty much all aspects or many, many aspects of real estate investment. You're a great resource. And you know a lot of folks. You're going to need insurance. You're going to need contractors. There's so much stuff that will be needed to be successful here. And you've been doing this long enough that you have all those folks, and they will do right by you because otherwise they won't get your referrals. So
that's very true. Very true.
Clients well. I want to get to this one last quick question that Eric has regarding cap rates. My feeling about cap rates is the same feeling I have about speaking to investment in a market, which is, or for that matter, as a nation. There is no national real estate market, and I suspect that Metro Atlanta is so big, there is no even Metro Atlanta market. There are a ton of little submarkets, and I'll be the first to admit, I am not an expert in every submarket in Metro Atlanta. There are just too many. Nobody is. And I'll be the first to say that if you're buying a fix and flip property in the city of Atlanta, you want somebody who lives and breathes that stuff, and that's not us, because it's the kind of environment, and I've said this before, where you travel on the same street, you'll go one block in one direction, and it's hardcore, dangerous, hood level neighborhood. You'll go a block in the other direction, and it's $500,000 homes. And I have no idea which direction that line is moving. Is it moving more to the left or more to the right? Someone who lives that on a daily basis knows that market, and they can make money in that market because they're there. If you're not there, you don't have a hope of making money. And I'm not there, so I don't try to make money in those markets. I try to make money in markets where it's easy to be a landlord, where people want to live and rent. And fortunately, there are lots of submarkets in Atlanta that do that. So the rates of return in Atlanta as a whole probably are under some pressure, but that's because they're building like crazy here. But they're not building affordable houses. They're building, relative to Atlanta prices, high-end $600,000, $700,000, $800,000 properties that I guess they believe somebody can afford, but the average person cannot afford that. So for someone looking for a 3-bedroom, 2-bathroom house in this market, there is a huge shortage of housing, of affordable housing for those folks. And when I say affordable housing, I don't mean Section 8. I mean, family, for a 2-income family making pretty good money, wanting to rent, is having a hard time finding a 4-bedroom, 2.5-bathroom house that they can afford. And rents have skyrocketed. I'm looking at a property now that we looked at, 4 or 5 years ago. It was $1,000. Now it's like $1,300. And that's not atypical. So I wouldn't say that the cap rates are compressed. I'd say that there are submarkets in which the cap rates may be compressed, but there's still tons of opportunity here that I'm seeing. And yes, I'm aggressively looking for these. But the deals are there for sure, and it is possible to get a great deal here that makes your socks roll up and down and your hair curl quite nicely. Again, I don't want to turn this into a pitch for us. I do want to try to make this as generic and Atlanta-based as possible. And yes, there's absolutely an opportunity for us to talk in more detail. What I'll ask you to do, and I'm not sure that there's a way for you to vote on this call, but if you can just give us, if there's a comment section somewhere here, if you can just comment and let us know if this kind of call is helpful, is useful, because, someone's trying to chat. Understood. Yeah, okay. Adam, thanks for joining us, and we'll talk later. I definitely want to make sure that everybody has an opportunity to talk. Realistically, though, we only have an hour. So my main question is, and we'll be checking back with folks, do you think it was worthwhile? Should we do it again? What other topics can we cover? We'll get back to folks after this call, and we'll follow up and talk about some of those other topics. But it sounds like this is something that's worth doing more of. And so I will say that'll be at least the working plan unless we hear otherwise. Marta, did you have any other comments that you wanted to make?
No, I just think that perhaps that we've given you a fire hose full of information, and we didn't intend to give you too much information, but we wanted to give you enough topics to consider and to be aware of. We believe in being completely straightforward and transparent, and we wanted to make sure we gave you enough to think about and consider as you are considering becoming an investor in the Atlanta market. So that's all I had to add.
Cool. Well, I want to honor our commitment to try to start and end on time. It's 11:02 right now, local time. What I will do is we will provide a copy of this presentation to just the attendees for this call. I don't want people to be concerned that their questions are going to be seen by other people. And then going forward, we'll decide how we want to handle that. But for now, we'll make sure that the audio and video are made available. And I thank you all for joining us on the call. I am eager to have more conversations like this, and I look forward to us doing this again. Awesome. So we're going to wrap up here and shut this down. But again, we'll be back in touch with you all shortly. And thank you all for joining us. Marta, thank you for presenting and for helping us bring this to life.
Thank you, Mitch. This is a great opportunity. I love what I do, and I'd love to share more of what I know.
Awesome. Awesome. All right. Well, we will talk to you all soon, and everybody have a great day.